Let me ask you something most financial advisors never ask. You have a good job, a good salary. Maybe you're a manager, a professional, an executive. You work in an office. You use a laptop and a phone all day. Nobody is going to drop something heavy on you at work. Nobody is going to burn you or cut you. You have one of the safest jobs in the world. Tell me, why is your income one of the most unprotected? Today, I want to talk about the one insurance product perfectly designed for people exactly like you that almost nobody in your income bracket actually has. Let us start with what is already happening around you right now. Retrenchments are no longer something that happens to factory workers or retail staff. In 2026, PMETs, professionals, managers, executives, technicians are being retrenched at rates we have not seen in years. Companies are restructuring, roles are being automated, entire departments dissolved overnight. And when retrenchment happens, your company hands you a one-time package. In Singapore, typically 1 to 2 weeks of salary for every year you worked there. For most people, that money runs out in 3 to 6 months. After that, you are completely on your own. Now, here is the part nobody is talking about. Retrenchment is not the only way your income can disappear. What if the reason you cannot work is not a business decision, but a health one? What if it is cancer, a stroke, severe depression, a spinal injury from a car accident on a Saturday morning, a condition that makes sustained concentration impossible? These are not rare events. They happen to people in their 30s, 40s, and 50s, people with mortgages, children in school, people who earn good salaries and have built a life entirely around that income. And when it happens, your company owes you nothing beyond your medical leave. Your health insurance pays your hospital bills, but nobody replaces your monthly salary. Save this video because what I'm about to explain changes the way you think about income protection entirely. Plain language, no jargon. Income protection insurance does one thing. It pays you a monthly income when you cannot work due to any health reason, be it mental or physical. Accident or injury. Any medical cause that prevents you from doing your job. It's not a lump sum. It is not a one-time payout. It's a monthly income paid directly to you every single month for as long as your condition prevents you from performing your original role. Let me be very specific about the number because this matters. If you were earning $10,000 a month, this insurance can pay you up to $7,500 every month while you cannot work. If you were earning $20,000 a month, up to $15,000 every month. Month after month, not once, every month, landing in your account the same way your salary used to be paid now to you. Your mortgage does not pause when you are sick. Your children's school fees do not pause. Your loan repayments do not pause. This insurance makes sure your income does not pause either. You might ask, why 75%? Why not 100%? It is intentional. The insurance is designed to support your recovery, not to make staying away from work more comfortable than going back. 75% protects your life and your family, but it preserves the motivation to recover and return. For most professionals, 75% of the salary is still a very significant monthly payment, enough to keep everything running while you focus entirely on getting better. Now, I want to make one distinction absolutely clear, because this is what separates this insurance from everything else you probably already have. Your hospitalization plan pays your hospital bill one time for that admission. Your critical illness plan pays you a lump sum when you are diagnosed one time. That money has to last however long your recovery takes. But income protection insurance pays you every single month. 1 month, 6 months, 2 years, 10 years, all the way under age 65 if your policy is structured that way and your condition continues. Now, this is the only insurance that things in the same time horizon your bills do. Everything else pays you once. This one pays you every month for as long as you need it. Save this video, share it with every professional you know who thinks they are already covered. They are probably not. This is the counterintuitive argument. Here is something that surprises most people. In the insurance world, occupations are rated by the risk levels. Construction workers, delivery riders, laborers, pilots, high risk, higher premiums. Office workers and professionals like doctors, accountants, engineers, managers, lawyers are classified as the lowest risk occupation class. Class 1, the safest category, which means two things. First, your premiums are probably the lowest available to anyone in the market. You are paying minimum rates because you are considered the safest occupational risk. Second, and this is what most people completely miss, your income is the highest. Low occupational risk does not mean low income risk. It means the exact opposite. The higher your salary, the more catastrophic the financial damage when that salary disappears. A person earning $3,000 a month loses $3,000. A person earning $15,000 a month loses $15,000 every single month. That gap does not close on its own. The absolute financial exposure of a professional is exponentially higher than a blue-collar worker, and yet professionals are paying the lowest. This is the most underutilized insurance product among the exact people who benefit from it most. You have spent years building a career, a salary, a lifestyle, a financial plan. Your mortgage, your children's education, your retirement contributions, your investment portfolio, everything is funded by one single thing, your income. And most professionals have absolutely nothing protecting it. Follow me, because this is what your financial advisors should have told you years ago. I'm going to keep saying it until everyone who needs to hear it actually hears it. 3 things you need to understand. 1, the waiting period. When you make a claim, there's a waiting period before payments begin, typically 30, 60, or 90 days. Think of it like the excess on a car insurance policy. The longer you are willing to wait, the lower your premium. Most professionals choose 60 or 90 days because they have savings to bridge that initial gap. 2, the benefits period. Now, this is how long the insurance pays you. It ranges from a few years all the way until age 60 or 65. For a professional in their 30s or 40s, choosing a benefits period to age 65 is the most powerful option, because if something serious happens, you could be covered for 20 or 30 years of lost income. And 3, the amount you can typically insure up to 75% of your current income. 75% of a professional salary is still a very significant monthly payment that keeps your financial life intact while you heal. And the earlier you buy this, the cheaper it is. The healthier you are when you apply, the easier it is to get full coverage with no exclusions. Now, pre-existing conditions can limit or exclude your coverage entirely. This is not an insurance you buy after diagnosis. It is one you buy before anything happens, when you are employed, healthy, and earning well. I want to leave you with one final thought. The most important thing I have said in this entire video. In 2026, you face 2 very real threats to your income. The first is retrenchment. Your company decides your role is no longer needed. They hand you a package one time, it runs out in a few months, the door closes, and the decision was never yours to make. The second threat is quieter, more personal, and statistically far more likely to affect you over the course of your working life. Your health, a diagnosis, an accident, a mental health crisis that builds slowly over years of pressure until one day your body simply refuses to continue at the same pace. When retrenchment happens, you have no choice. You take the package, you deal with it, you move on. But if the reason you cannot work is a genuine, medically documented health condition, you have a choice that retrenchment never gives you. Monthly income paid to you every single month while you step back and recover on your own terms. Not because your company decided your role was redundant, but because your health came first. Retrenchment pays you once and walks away. Income protection stays with you month after month for as long as your condition prevents you from performing your original role. That is not a loophole. That is exactly what this insurance was designed to do. And in a year when retrenchment is rampant, when job security is fragile, when the pressure on professionals has never been higher, having this protection in place before something happens is the difference between recovering in peace and recovering in panic. Save this video. Every professional you know needs to hear this. If you are a salaried professional and you have never had a proper conversation about income protection,
I found this on the web.
Not about your hospitalization plan, not about your critical illness cover, specifically about what happens to your monthly income if you cannot work. That conversation is overdue. You have spent years building your career, years building your salary, years building a life that depends on that income showing up every single month. Do not let one health event or one retrenchment notice take all of that apart. Save this video, share it with someone who earns good money and thinks they are already covered. They are probably not. Follow me every single week. I share the financial protection knowledge that high-performing people actually need. Not textbook theory, not product brochures, real conversation about real risks in the real world we are living in right now. And if you want to know exactly what this looks like for your specific age, specific income, and your situation, you know where to find me. Retrenchment is their choice. Your health is yours. Make sure your income is protected either way.